The Precious Metals Week in Review, June 26, 2015. Brought to you by Precious Metals International. Volatility remained in all markets this week as talks between Greece and its creditors continued to show no signs of any real progress. The number of Americans filing initial claims for state unemployment assistance jumped by 3,000 claims last week to a new seasonally adjusted level of 271,000. Claims for the previous week were also revised higher by 1,000. The 4-week moving average of claims, which most economists consider to be a better measure of the state of the jobs market, dipped by 3,250 claims to a new level of 273,750. Continuing claims, which indicate those people who are still receiving benefits after an initial week of aid, spiked by 22,000 claims. The 4-week moving average of continuing claims also moved higher, rising by 14,500. U.S. consumer spending marked its largest increase in close to 6 years in May, as consumers spent more on automobiles and other high-priced purchases. According to the U.S. Commerce Department report, consumer spending increased by 0.9% in May, and April's figure was also revised higher to 0.1%. Consumer spending makes up more than 2/3 of the gross domestic product for the U.S., so the better-than-expected increase might mean that the first quarter contraction of 0.2% may not carry over into the second quarter after all, as some economists had begun to fear. On Friday, the Shanghai Composite Index in China plummeted by more than 7%, its largest single-day loss in 5 months. The plunge follows on with weakness that appeared last week and saw the Chinese stock market move into the 10% correction territory. Friday's plunge pushed the Chinese market further into correction, sending it down nearly 19% from the highs that were hit just 2 weeks ago. Stuart Richardson, Chief Investment Officer at RMG Wealth Management, told CNBC's Worldwide Exchange on Thursday. "We're cautious on Chinese equities, which we think is a bubble which is bursting real-time here." Mr. Richardson continued saying, "If China does what we think it could, which is to fall by 50%, then the Hong Kong markets will be hit very hard. We're avoiding those markets." As Chinese investors watch their stock markets plunge, a rise in gold imports by China may indicate that these investors are rebalancing their investment portfolios by diversifying into gold. According to a research note by Capital Economics that cited data from the Hong Kong Census and Statistics Department, gold imports to China through Hong Kong rose by 36% month-on-month and 35% year-on-year. Simona Gambarini, a commodities economist at Capital Economics, said, "We think investors are becoming increasingly worried about a more pronounced correction in China's stock market and will return to gold to diversify their portfolios." South Korea announced this week that it would implement a stimulus package worth $13 billion in an effort to boost a flagging economy which is under increasing pressure from an outbreak of Middle East Respiratory Syndrome, MERS. South Korean consumers appear to be staying home amid the outbreak, as shown by plummeting sales at department and discount stores in the first week of June. Consumer sentiment in South Korea fell to its lowest level since 2012, according to data released on Thursday. The tense negotiations between Greece and its international creditors continued this week as the June 30th deadline for the payment that Athens owes to the International Monetary Fund, IMF, looms near. Yet another meeting ended on Thursday with no deal in place, and more meetings are slated to take place throughout the weekend as Tuesday's payment deadline approaches. According to analysts, Greece must reach an agreement with its lenders no later than Saturday if it has any hope of being able to make the payment that it owes to the IMF on Tuesday. Even if they manage to finally come to a compromise, the likelihood of Athens being able to make its payment remains slim. Any deal that might be arrived at over the weekend must also be approved by the Greek parliament, which could cause the ordeal to drag on further. Crude oil dipped below $60 a barrel again this week as the negotiations between Greece and its international creditors remained at a standstill. The global oversupply of crude oil continues to remain a problem, despite declining oil rig counts in North America, and that is also maintaining downward pressure on the price of crude. The euro started the week drifting slightly higher against the US dollar, but began plummeting lower by the end of Monday. Tuesday marked the end of the drop for the euro, but it moved basically sideways for the rest of the week and will close lower against the US dollar. The Japanese yen began the week moving lower against the dollar as well. By Wednesday, the yen had seen its low for the week and began moving higher. But a steep drop on Friday will see the yen close lower against the US dollar. Volatility should be expected to continue as we enter the final weekend before Greece's payment is due to the International Monetary Fund. Market volatility could increase even further. If Greece cannot reach an agreement over the weekend with its international lenders, it becomes a highly likely possibility that the European Central Bank will be forced to cut off the emergency liquidity assistance program that has been keeping Greek banks afloat, as their customers have made runs to remove cash, as fears grow that capital controls will be put in place that would limit access to bank deposits. German Chancellor Angela Merkel told a news conference this week that it was not possible to find new money for Greece beyond what was left in its second bailout program. It seems that nearly every analyst is of the opinion that any risk surrounding a default by Greece on its debt is already priced into the market. The economist who is credited with coining the term Grexit is of a different mindset, however. Willem Buiter, Citigroup's chief economist, said on Thursday that it would be a disaster if Greece leaves the Eurozone. Mr. Buiter said, "You can handle the financial crisis. You cannot handle, I think, the damage of the European integration process. It would be the first time since 1951 that a treaty-based integration process would have been reversed. It would be a disaster." Mr. Buiter also commented on the effect that a debt default by Greece might have on the US dollar, saying that itself would become a seriously dampening factor to the US expansion. As well, it is an inflationary factor. If it were actually to materialize, the safe haven demand for the dollar could cause the Fed to pause. Markets in China also seem to be feeling unease over the situation taking place in Europe. The stock market plummeted further into correction territory this week, moving closer to the 20% drop that would put it firmly into bear market territory. Gold demand in China appears to be rising as the stock market falls, perhaps indicating that Chinese investors are seeking traditional safe haven assets to protect their hard-earned cash from what appears to be a bursting bubble in stocks. Elsewhere in the world, 3 separate terrorist attacks took place within hours of each other on Friday on 3 separate continents. It is unknown if the attacks were coordinated, but the Islamic State has laid claim to at least one of the attacks that took place on a Shiite mosque in Kuwait during Friday prayers. The attacks in France and Tunisia also appear to have been the work of radical Islamic extremists. In the U.S., officials have warned local police and security forces to be vigilant for threats as the July 4th Independence Day holiday approaches. This weekend, it remains vitally important to keep an eye and ear on the news feeds to prepare for any effect of a complete breakdown in the negotiations taking place in Greece. If China's stock market continues to plunge and the US and European markets suddenly discover that an event in Greece was not priced in after all, a sudden surge in demand for precious metals as a way to diversify investment portfolios that suddenly become instantly overexposed to plummeting stock prices could send prices for physical precious metals spiraling suddenly higher. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, June 26, 2015. Brought to you by Precious Metals International.